What's up, everyone? It's Scotty with Money Vesting. So markets here closing in on a red week. So we were lower, we were higher during market open, but Apple obviously accelerated that sell-off a little bit further, down almost 5% on the day. Amazon gave back on some of those gains, and we talked about this in our yesterday's market update, that it's going to be quite a bit of a tug of war depending on which side the market basically tilts, whether it's Amazon or Apple. And well, guess what? Apple definitely did have more weight to its move lower, which obviously resulted in the markets to be lower as well. So hope you guys enjoyed this video and find it helpful. We are pretty much done for the week. Next week is incredibly important because we've got inflation numbers and the CPI numbers coming out on August 10th. So we're definitely going to be paying attention to that, but make sure that you do drop a like and of course subscribe to the channel. If you're just joining us for the first time, link to our Discord, Patreon is going to be down below. The first week of the month is the best time to join. And of course, you get access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included. So links are down below. So CPI, again, like I said, is going to be scheduled for August 10th, 2023 at 8:30 a.m. Eastern. So we will be live during that time. Hopefully, fingers crossed. Again, I'm going through a bit of a transition here, moving countries, so I'm just settling in. But yes, CPI numbers scheduled for next week. And we've already talked about crude oil, wheat prices, food prices. They've been on the rise. In fact, crude was up a little bit over 14% in July, not to mention a lot of other commodities, especially food prices with the export bans are also on the way higher. So this could most certainly affect inflation, and we already got that unemployment report today, which I'll break down here in just a minute. But this right here was the state of the market, with the Dow dropping over 150 points, S&P down over 0.5%, the Nasdaq also dropping over 36 basis points here. And like I said, there was a lot of volatility. There was going to be a lot of volatility because of the two different giants, big tech, reporting different types of earnings and reacting differently to the stock, to the price action here. So we were higher, lower, higher, and then we pretty much closed down on the day with over 2,700 stocks pushing higher, advancing with over 3,200 declining on the day. So S&P 500, Nasdaq tumbled for 4 straight days, notching the worst week since March of 2023. So people this week seem more respectful of the risk than they were before. And this was Steve Sosnick of Interactive Brokers, adding that lots of bears have been capitulating, which is often a sign that we're closer to the end of a rally than at the beginning. And Friday marked the final day of what's been the busiest week of second quarter earnings season. Of course, Amazon reported. We've already heard from Tesla. We've heard from Meta. We've heard from Google, Microsoft, Apple, AMD. All these companies are out. And of course, we have already learned what their numbers were like. We have seen growth, revenue growth year over year, except for AMD and Apple. And most companies, unfortunately, have reported declines when it comes to EPS on a year-over-year basis. And this right here is the cooler jobs report. The jobs report was a little bit mixed. Again, it came out today. It was very split because we did have a softer print in the non-farm payrolls, only 187,000 jobs added in July versus the consensus of 200,000. But the unemployment rate still tickled down here a little bit over 3.5. That's down from 3.6. But again, average hourly earnings were higher, so rising 0.4%, annualized, that's sub 5% number. And again, 4.4% on an annualized basis. And that came in slightly ahead of the 0.3% and 4.2% respectively that the market was expecting. So it was a little bit of a split report. That the gain in wages definitely does suggest that inflation could be more persistent again in the months to come. But the softer jobs report and the fewer than expected non-farm payrolls addition in the month of July does suggest that, okay, there's not as much hiring, there's not as many jobs available, and people are not, getting employed, and that's going to kind of lead into that recession narrative as well. So there's like two different tangents that we can look at it. So that's why I mentioned that it's a very mixed report right now, and we don't really know what to make of it, and how to really specifically look at it from an interest rate standpoint, because bottom line is the labor market's still very tight. Unemployment still strong at 3.5%, and wages definitely did come in above expectations. So in my opinion, it would still be a net negative from a interest rate standpoint. It would be like net bearish if you were to look at it from this perspective. And that's why, it's one of the reasons why the markets were lower, because you've got a stronger jobs report, you've got a stronger labor market with unemployment rate at 3.5%, and you've got wages increasing more than the expected number. That's, again, playing into the inflation narrative, which means what, right? The Federal Reserve can be a little bit more hawkish with respect to interest rates when it comes to do that in September, right? So no meeting in August. The next meeting we have is in September. So this right here, a longer correction period ahead for the S&P 500. So Credit Suisse basically said in a report, and this was David Sneddon, saying, and I quote, the S&P remains under pressure expected following its bearish reversal day from Thursday last week and rejection from the top of the uptrend channel from March this year. And we look for a deeper setback to support next at 44.44 or 44.39, then the lower end of that uptrend channel from March, now at 44.19 to 44.09, is some of the levels that they are targeting. Obviously, we're trading at a little bit over 4,500, I believe. So S&P 500 is at over 44.72, so a little bit under 4,500 now. And of course, the Nasdaq here also dropping pretty heavily, like from an intraday level, dropped over 1.5%. So that is again a pretty sizable move intraday. This is a 1.3% move for the S&P, and the Dow here dropping intraday. Again, that's far more important than how we closed on the day, because that speaks volume to the actual price action and of course what transpired during the day as opposed to day over day. And this right here dropping over 445 points for the Dow, dropping over 1.26%. So all three indices basically saw a significant sell-off intraday, right? That's, in my opinion, a lot more telling, a lot more valuable info than what we did on a day-over-day basis. Volatility here, on the other hand, so VIX was up a little bit over 7%, so back over 17 levels. And these are levels that we haven't quite seen going back as far as June of 23 when we were on our way down. But before that, it was going back as far as May when we were on our way up, right? So right now we're back over 17. So keep a close eye on the VIX. Obviously, if it gets up to 20, which is a very reasonable level, which is a very reasonable potential target for the VIX, then of course the S&P and the Nasdaq could be on their way down a little bit, as we have already talked about with the potential technical breakdown that's also underway. Something that I've been talking about in the last couple of videos, that, obviously if this breaks, which is the 21 EMA, which is the technical support, then there is more potential downside. And I think that's really what the bears are going to start to take advantage of, considering that we are now in a technical pullback here. So market mentality is changing. Interactive Brokers pretty much mentioned the risk mentality is changing a bit. And he noted that investors seem to be clamoring for volatility protection, pointing to a sharp spike in the volatility index. And the VIX was lower on the day near the 14 level around 1:50 p.m. Eastern, and it was higher for the session, well above 16. So if you come over to the 30-minute chart here, you'll notice that up until 12:40 p.m. it was really low, and that's really when the market started to collapse intraday, right down over 1.5%, close to 2%, and that's when the VIX pretty much spiked a little bit over 19, almost 20%, getting up to over 17 levels. So that's, again, a little bit of a telltale sign. I want to help you guys focus more on the intraday price action to help you better understand what's to come, than as opposed to just looking at on a daily basis, because markets intraday tell you much better story from a price action standpoint than on a day-to-day basis. So Apple here with the biggest decline, 4.8% here on the day, definitely selling off, followed by Palo Alto Networks down 8%, Fortinet absolutely getting crushed, down 25%, but that's good news because we've been waiting for that stock to come down for the longest time, so we'll definitely be doing some more research and analysis, and of course, we'll be making a decision soon. But Apple here definitely dragging down the entire market, Tesla down over 2% as well. That's also good news because I've got covered calls that are now printing, that are now once again out of the money, so that allows me to keep my shares and also make money on the premiums and the covered calls that I've sold on Tesla in June and in July. Meta and Google here very, very flat. Nvidia slightly higher, AMD slightly up over 2.3%. Amazon obviously having one of its best days, up over 8.2%. It was much higher. I think it was up like 10 to 12%, but obviously giving back on some of those gains. So the entire market, very, very mixed bag, with Apple, Tesla, two of the largest companies, definitely selling off, Amazon pushing higher, so that wasn't enough, obviously, to compensate for how much Apple lost, because 5% of $3 trillion is $150 billion. 8% of a $1.3 trillion is about $120 billion. I want to say like $105 billion maybe. So Apple definitely had more power over the market. And of course, when you combine Tesla with that, which is also down 2%, then obviously it's no doubt the markets were lower on the day today. So this right here is going to be, again, the day here. So consumer cyclicals were the only ones that were up. But if you take a look at the week, energy was the only sector that was up. Everything else, 10 out of 11 sectors selling off and were lower on the week. And in the last 1 month, we've got utilities underperformance. Energy is the big leader over the last 1 month as well. We got volatility with a huge spike, canola, soybean, we got lean hogs, wheat prices, crude oil, orange juice all pushing higher with copper, sugar, oats, coffee, all of these pulling back. Bitcoin's a little bit over 29,000, Ether just over 1,800 as well. So if you come over to Ether, Bitcoin, again, just consolidating sideways at support, so we'll continue to monitor that. And Bitcoin here, again, 28,300 is going to be a much better support. And right now we're just trading at a little bit over $29,000. Crude oil here continues to make waves, continues to push higher, getting a huge breakout above $82 per barrel. So that is something to pay attention to as well, because like I said, I mean, in the month of July, it's up over 14%. In the month of August so far, it is already up over 1%, and we're just 1 week into it. So if we continue to see this, rally back higher, if we see that oil prices continue to rally, by the way, I learned something from Saudi Arabia that they're planning on doing some more supply cuts. Could be wrong, but I believe there was a catalyst here that came out just earlier in the day. But I may have to look into that a little bit more. I remember seeing that on my Bloomberg, that something came across from Saudi Arabia. But nonetheless, I mean, and crude oil still up 82.50. It continues to push higher. We've come a long way from like 60s. So it has definitely rallied quite a bit in the last couple months here, over 30% rally. It's not a small move, folks. Like, it's definitely going to be affecting inflation one point in the future. Sooner or later, it is going to play into the inflation numbers here and CPI numbers very, very soon. So that is something to keep in mind. And obviously, it's going to affect inflation, so we'll take a look at that on August 10th. But going back over to the S&P 500 here, for the week, down over 2.2%. That's a pretty sizable drawdown, right? So it's not a small pullback. It's definitely a pretty significant pullback here. And not to mention the daily moving average, like the 21 moving average, we're now starting to see that bigger pullback and that breakdown below that 21 EMA. So something that we were expecting. Remember when we were talking about a pullback, a correction, that's very normal. This is it. This is what it looks like. We're down over 2.8, almost 3%. Very normal, very healthy, nothing to be like going crazy over, nothing to be scared of, but just being aware that this is, again, a possibility and this does happen. So next support really is going to be 44.46. So this right here is what I'm watching right now. But if we do see a breakdown below this level, then we could kind of flirt with that correction level, which is going to come down to 43.30, and that's going to put us down a little bit over 7 to 8%, I believe. So a little bit under 6% actually. So we're still not going to be in that correction level. Still going to be in somewhere between that pullback and correction. But that's going to be that next level in case we break down below 44.50. So those are some levels to pay attention to. And the NASDAQ here also dropping. So on the week, it was down over 2.85, almost 3%. So it was a red week. And of course, we are selling off here a little bit lower, down almost 4% from its recent highs. Right now at support, sitting roughly at around 13,850. So this right here is going to be that support. But of course, if we do see a breakdown below this, the next support really is going to be 13,300. That's when we get down to a potential correction territory of a little bit over 8% as well from its recent highs. Now talking about Apple here, and Apple on the day was, again, lower, significantly lower. So huge breakdown. So you can see that we not only broke down below that 21 EMA, but we really closed at the low of day, right? Closing at the low of day is definitely something to take note of. And here's the thing, right? I've tried to explain this concept to everyone as much as I've tried, and it's a very, very timeless lesson, right? It is something that you will carry with yourself forever. Okay, we're nothing but timeless lessons here at this money investing community. That's why I love our community so much, is because we ask the important questions, we go over the important things, and not go over like super speculative, like what's going to be the next next big investment or stock, but instead, learning lessons and being able to think for ourselves. Like that's the gift that I can give you, is to think for yourself and not having that reliance or dependency on me, right? On my analysis or what stock is caddy buying, right? But I really want to, go over specific things, specific lessons that will help you think for yourself, obviously become more proficient and, become just really good at analyzing the markets and looking at different things. So the one thing that I've been, saying it for a long time is no company is immune, right? Those 4 words, no company is immune. What does that mean? That simply means that in the world that we live in, with so much technology, so much disruption, so much growth, so much tension between different countries. There's so much geopolitical pressure. There's just so many different variables at play. Market behavior is changing every single day. Consumer behavior is changing every single day, right? I can bet right now the way we respond to things, the way we behave today was not the same way we used to behave 10 years ago, right? And it's not going to be the same way we behave and react to things 10 years later. We're constantly changing, right? The only constant is change, right? So no company is immune, right? You may think of Nvidia, you may think of Microsoft, you may think of Apple, you may think of Amazon, you may think of all these companies, even Tesla, you may think of all these companies as being like the safest companies out there. You know, they've got plenty of cash, they're disrupting, they're like technologically advanced, nothing can ever go wrong with them. Just think again. Think again. I would just encourage you to think again. No company is ever immune to the changing market conditions. Every company is vulnerable for disruption. Every company is vulnerable to get replaced. Every company can be gone. Okay, that is one thing you have to understand, is because this again reminds me from the shareholder meeting of Warren Buffett, right? Where he put up two different pictures. The first picture was all the top 10 companies in the 1980s, 1970s, right? Top 10 by market cap. And then he put up a page for 2022. And you know what? All the companies that were on the 2022 list, top 10 companies by market size, were none of those companies that were back in 1985. They were completely different companies. And it's a very significant, like it's a good thought process to have, is that every company is evolving and there's going to be new entrants, there's going to be fight for capital, there's going to be disruption, there's going to be competition. So to think that Apple is the safest investment or it's the immune company, like if I just buy Apple I'll be fine, is probably the riskiest thing you could do. So be aware of that. It's a constantly changing environment, and I think Apple deservedly so, coming down to reset its valuation, because we've talked about 30 times sales, right? It doesn't make sense for Apple to be trading at those levels, right? Valuations are high regardless of how great this company is today, right? So next support really is going to be 177. So this right here is going to be that level to watch that I'm watching. Of course, if you do get a breakdown below this level, next support is going to be all the way down to 150s, 157, 155. So those right there are going to be a couple levels to watch. And right now we're definitely seeing a pretty significant breakdown below that 21 EMA for Apple. Amazon here, giving back on most of the gains. So intraday definitely did sell off from 143 down to 139. Resistance is going to stay put at 146. So this right here is going to be that level to watch for Amazon, and support level is going to stay put down to as low as 137 for Amazon. And of course, if we do get that breakdown, next support all the way down to 126, same levels that we were talking about previously. Tesla here continues to get rejected at that 21 EMA, and we definitely did see a bit of a breakdown below that symmetrical triangle. Tried to recover, got rejected again, sold right back down. So next support really is going to be 240s. I actually wouldn't be surprised to see Tesla in the 240s. That's a very reasonable, very comfortable level to watch for Tesla. Talking about Nvidia here, Nvidia continues to trade sideways, so no further analysis needed. Still trading at 41 times sales. Still obviously trading at a very expensive valuation, but of course the buyers and the sentiment and everything continues to be very strong for this company at the moment. Support level 439, resistance 480. Advanced Micro Devices here getting a little bit of that rejection at this lower high inside this downtrending channel. We're still, again, in that downtrending channel, so that lower high is going to be closer to $118 per share. Support level is going to be staying put at close to $106 per share. So we're definitely seeing a little bit of that support validation a couple times for Advanced Micro Devices. So very much in that downtrend. Resistance is going to be at closer to 120s. Support level at close to $106. Talking a little bit about PayPal. And PayPal obviously getting sold off even further today. Next support is going to be $60. I wouldn't be surprised if it ends up at those levels, at those prices again. And again, I think the two main reasons for the sell-off is the decline in active accounts and the transaction take rate, which was like a very, very minuscule drop on a quarter-over-quarter basis. So it's crazy how like a small metric can have such a disproportionate sell-off in the stock. But it is what it is, right? It's the market. And as I mentioned in one of my other videos, like even if active accounts and all these different things, even if active accounts and transaction take rate and margins and everything continues to decline, but if the company is able to grow revenues and earnings, how does that matter, right? I mean, at the end of the day, isn't the most important thing the revenue and the earnings and the cash flow? Because everything translates to those numbers, right? Whatever it is that you're looking at, whatever company, right? SoFi, for example, if they, let's say, for example, a year from now, SoFi's products and members and users and everything starts going down, right? It starts declining, but they're still making more revenue, they're still making more earnings. How does that matter if the revenue, if the users and everything is declining, right? That is one way to look at it, obviously, but the market doesn't seem to agree, and we're definitely selling off quite a bit. But like I said, the earnings continue to be strong. If they're gonna do $5 this year, 5 divided by 62, we're looking at a earnings yield of a little bit over 8% now. 8% earnings yield, compared to obviously 4 or 5%, where you can find someplace else. So next support at $60. I wouldn't be surprised if it ends up at that level. Square with a huge drop over 13%. Again, mentioned this in my last week's market updates that there could be a huge short trade idea for Square, considering how overbought it really was. There was a negative divergence and we were approaching a resistance. So I really hope and pray that you guys took advantage of that short trade idea. Literally mentioned this in my market updates to look into this, definitely. And obviously it's sold off quite aggressively from those levels, down over 22% already. So next support really is going to be down to $62, all the way down to as low as $58, down to as low as $51, and we'll kind of recycle that swing trade to the upside eventually. Meta Platforms here also just consolidating sideways, actually outperforming quite a lot of stocks here on the day. So really just trading sideways. Support level is going to be at that 21 EMA, and that support sitting roughly at around 300. And of course, we got a resistance at 351. Talking about Netflix here, Netflix on the day also just consolidating sideways, so no really analysis needed. Lots of consolidation sideways, resistance 458, support 410. Google here, on the other hand, also just down 18 basis points, getting rejected at 131, 132. Support level is going to stay put at 126, 127. And of course, if we do see a breakdown below this level, 115 is going to be that next level to watch for Google. Talking about Microsoft, and Microsoft here also selling off intraday, 34 basis points higher. Like I said, 322, 320s are going to be that next support levels to watch for Microsoft, and resistance is going to stay put at 351 for the company. And then finally, we've got Shopify and Enphase, and Shopify here also accelerating that sell-off, down almost 2%. Next support is going to be down to $54 per share for Shopify as well. And then finally, we've got Enphase here also basically consolidating at 140, closing right dead on 140 here. Resistance is going to be 151, and of course the good deal levels are approaching very soon for Enphase. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Again, next week we've got inflation. This week was a red week, a pretty significant red week, and of course intraday we definitely did sell off quite aggressively. So let me know in the comment section below, what do you think about the markets right now? Are you buying, selling, holding? What are your thoughts? As always, make sure that you drop a like, subscribe. Link to our Discord page is going to be down below. As always, happy investing. I'll see you all in the next video.